Welcome back, everyone. Continuing our coverage of the big tech earnings this week. We've got much more help now joining us to break down those Alphabet earnings. Brad Erickson, RBC Capital Markets Internet Analyst, entering the chat here. Brad, first and foremost, want to get your takeaway from what you saw and what this kind of shapes up for the rest of what we may hear for big tech.
Yeah, so this one's pretty interesting, actually. So I think what's going on effectively is clearly we're headed into some magnitude of an advertiser pullback. Obviously, the management spoke to it last night. And then, of course, Snap last week really gave us indications that that's going on. I think at this point, where it's a little bit challenging with Google in particular is that they don't provide us really any sort of quantitative Q3 guidance. And so we don't really know the real magnitudes. Our channel work we've been doing for the last 3 months suggests that about a quarter of advertisers, SMB, small and medium-sized advertisers, have in fact pulled back. So the magnitude is real, but we're not really going to get sort of more fulsome indications of that until Meta reports tonight. So,
Brad, given the concerns that were voiced throughout the earnings call last night, are you surprised by the market reaction here?
Not totally. I think there's a couple things going on. One, obviously the writing's on the wall that we're headed into some level of downturn, right? And again, after Snap, people got really freaked out last week that the whole ad market is imploding. I think if you look at Google's results, just take purely search ad revenues for Q2 alone, things looked pretty good. And so from that perspective, definitely better than feared. Secondarily, I think as we zoom out just from tech into the broad, say, S&P 500, there's very, very few names that are such high quality that you would want to own before you'd own Alphabet. So I think those two things are kind of working for the stock here this morning.
We heard Microsoft talk even more about what their advertising ambitions are. What do you make of this finalization of the acquisition of Xandr, early partnerships, and what kind of contribution that could actually provide to the business?
Yeah, so I can't speak for Microsoft, obviously, because I don't cover the stock, but certainly they're clearly looking to become a bigger player. I mean, they started this years ago with the acquisition of LinkedIn, which their business has done tremendously well, we think, through COVID, and then obviously, yeah, with the acquisition of AppNexus, now Xandr, certainly getting themselves into more in the ad tech space here going forward. So yeah, could definitely be a share gainer. I think the debate has always been 70% of the ad market is kind of the walled gardens, right? The Googles, the Facebooks of the world. 30% is what's referred to more as the open internet. So obviously where Trade Desk, a name you mentioned earlier, tends to play. Certainly, I think the view is that they can gobble up more share and potentially drive more share in that 30% bucket here going forward.
And Brad, interesting nugget on Alphabet. So buybacks were $15.2 billion in the second quarter. That was the highest ever for a quarter, up from $13.3 billion in the first quarter. What signal is that sending to you?
Clearly, management thinks the stock's undervalued, but I think more importantly, just longer term, it highlights the fact that this management team is clearly very committed to returning capital to shareholders. This business generates a ton of cash, and we think will generate even more cash in the future. So, yeah, I think just easily signifies that this management team is going to remain committed to lowering that share count, returning capital to shareholders.
With regard to Alphabet, they had talked a lot about YouTube and the time spent on the platform, trying to give more metrics about how it's competing with its offerings from YouTube TV all the way into the ability to have more people spend time on shorts. And so with all of that in mind, everybody's still chasing after that new type of consumer that is spending more time and engaging more on TikTok. And so what's the best way forward for YouTube to be able to be that contributor to Google or to Alphabet that it needs to be in this broader competitive landscape?
Yeah, it's interesting that there's definitely a shift going on, not just on user engagement, but I think in the future as to how advertisers will monetize through that new surface, which we call short form video, which is what TikTok sort of invented. And then now everyone's trying to sort of do their own replication of it. I think where Google is especially probably well positioned long term, we can talk near term, but longer term, Google's pretty well positioned in that, they came out with this product called Performance Max. Basically what Performance Max is you're an advertiser. You don't quite exactly know where you're going to optimally spend your ad dollars, but you're effectively leveraging Google's AI to distribute your ad dollars across search, across YouTube Shorts. I think where we're still sort of in discovery phase, the ad industry is in discovery phase, is around short form video. TikTok is clearly capturing the hearts and minds of America's youth increasingly, but secondarily, advertisers don't still quite understand how content will monetize on in a short form environment as opposed to stories or a news feed where they have a lot of history over the last decade. So I think that's still very much in a discovery process, but we do believe over the longer term, between Google's 1P data as well as options like Performance Max I mentioned earlier, they're going to be really well positioned to sort of efficiently allocate as many of those dollars as possible.
I think I'm in the wrong gig, Brad. I should be creating cat videos for TikTok, but we'll take that offline. Brad Erickson, RBC Capital Markets Internet Analyst. Good to see you.